How's everybody doing today? Welcome back to the channel. So in this video, we're going to be talking about 5 stocks that are one of the best growth stocks in my opinion, my favorite personal stocks that I've bought or I'm currently looking at to purchase within the next coming year. So obviously within the next few months, it's going to be very volatile, especially during an election, where usually during an election, a lot of volatility happens because a lot of uncertainty is going on as well. So today, as always, the Dow's down while the Nasdaq is actually up for the day. So that's no surprise. We've seen that quite a bit throughout the last few months. So let's just get straight into the first stock. Actually, right before we jump into it, make sure to sign up for Webull if you haven't already. Now, Webull is a great brokerage that I personally use myself. All you guys have to do to get 2 free stocks is use my link down in the description and sign up. Make a brokerage account. Literally sign up. It takes minutes, and then deposit $100 or more, and you'll get 2 free stocks that can be worth up to $1,400. A ton of you guys have actually signed up and you're really liking it, so thank you guys for signing up as well. It means a lot. So yeah, let's just jump straight into it. So the first stock is Upwork. Now, especially during these times, has helped the stock a lot because obviously Upwork is a company where it's a freelance company where a lot of people who don't really want to hire employees, right? They can hire someone on Upwork. And same goes with people that are trying to make a business. You can hire people on Upwork to help you with it. So it kind of goes both ways, and it's actually one of the biggest, I believe it is the biggest freelance website right in front of Fiverr. And on the other hand, Fiverr has a very high PE ratio. I mean, I don't even think they're profitable, and they don't make quite as much sales as Upwork. And if they do have more users, those users are at a lot lower cost basis. So I would say Upwork is probably one of the best platforms for this specifically. And I have used Upwork in the past, and it's pretty decent. I know my cousin uses it as well to do any freelance type of work, which is pretty cool. Now, their financials aren't the best, but that's kind of to be expected because they're not currently making a profit, as you guys can see. But with a growth stock like this, it has potential to be pretty good. Now, it is up in the last 3 months about 70%, but if you go up for the year, it's only down 12%. I mean, it's down for the year. For a growth type of stock like this, it's pretty good because if you look at Fiverr stock, right, which is a very similar which isn't even as big. Look at this. It's up 200% for the year. Look at that. It shot straight up with only a 3 billion market cap, while Upwork has the 2 billion market cap, so this was already bigger before the pandemic, right? So they aren't magically pulling a profit. Like, they're still unprofitable. And just like Upwork actually was profitable for a few quarters here. So this is why I would say Upwork is a very good one. I'm currently looking into this myself. It's down for the month, right? So if I said this in a previous video, if it hits anywhere along the $12 mark, $10 mark, I think I'm gonna have to purchase this and slowly build up a position because I do think Upwork can have quite a bit of a good potential, right? Especially now during COVID, because if you look at the yearly chart, okay, let's go to the 5 year actually. So before COVID, the stock was about $10 before this happened. So right now it's at 14, and you got to remember this actually helped Upwork a lot, and it only went up $4, even though literally everyone's working from home. So this should actually be a lot higher. So I'm actually surprised it's not. But either way, I do think this is a good stock to purchase that I'm going to be looking at to buy. It could be a crazy growth stock at only 1 billion market cap. Like, this could easily go to 5 billion, just like how Upwork is, right? So, I mean, just how Fiverr is at 3-4 billion. This could easily hit that, in my opinion. So, and this would be 2x up to like $20, $30. So that is that. So next stock is good old Tesla stock. This is a stock that I've held for a few years now, and this is a crazy growth stock, especially if you're actually been holding it for a year or more. Literally, if you've been holding it for at least a year, you've been making crazy gains on this. Now, the thing is with Tesla stock is that you could potentially have a good opportunity to purchase this if you're looking into it within the next 6 months. Because I would say in the next 6 months or so, this stock can go anywhere from 900 to about 1600, 1800. It can go literally anywhere. That's a big range. Like, this could easily go to $1,000 within the next few months, and that would be kind of normal. So if that happens, that's definitely might be a good buying opportunity. Because in my opinion, I see this stock easily hitting 3,000 within the next 3 to 5 years, easily if they can reach that. If they can like continue selling the cars like they are right now, they can easily reach that in my opinion. Especially in 5 to 10 years, where they're expected to actually have a big chunk of market share, especially since every car is now turning to be electric or EV cars. And especially if they can license their autopilot and stuff like that, which they might even do, that will actually bring a crazy opportunity for Tesla. So this is a crazy growth stock, and this is one of the best ones. My favorite that I've ever that I've personally done. One of the best stocks I've ever done well in, to be honest. So this is crazy, and they might actually get into the S&P 500 as well. So that's pretty cool. So yeah, that is Tesla stock. The next one is good old Facebook. Now, obviously they own Instagram as well. Instagram is their like main driving force, with Facebook being the second one as well. Now the thing is, their advertising business is what really makes this so big, because companies are no longer advertising on Instagram. I mean, no, they are advertising on Instagram, but no longer advertising on TV, newspapers, good old fashioned billboards. No, they're doing it on Instagram and Facebook. That is like the number one way people are doing it. And as soon as like Coca-Cola and these huge businesses realize that, they're actually gonna they're realizing that a lot more power is in like Facebook and stuff like that. So that yeah, that is why I'm personally holding this. If you ever reach this under 200 or around the 200 mark, it's personally a steal in my opinion, because I feel like it could like easily reach over that, like 250s, 300s easily. But if you ever catch this at a dip, like if you ever caught this at 250, 240, that's an easy 30% gain right there, because if it ever goes under 200, it's a steal in my opinion. Even like 210, maybe it's a steal. 205. And yeah, for the last week, right? It's down one. It's up actually 1%. But if you go in the last year, it's up 20%. So it's been slowly rising. All these stocks literally mostly don't have any dividends because they are growth stocks. Um, for an exception, I believe, for one of them, which I'll show you at the end. So the next one is actually an ETF. So this is probably one of the best growth ETFs I could actually recommend. Now, I might build up a bit long-term position for this because it's just a ETF you can hold. There's not much managing to do. So this is called ARK Fintech Innovation. So they're basically, when you buy this, you're buying the people behind it that are managing it. So the main CEO managing this ETF is Kathy Woods, and she's actually really good at predicting and actually buying great growth stocks. She bought Tesla like 2 years ago. You imagine that. She knew that Tesla would be good, and she bought it 2 years ago in her other ETF. This ETF does not hold Tesla specifically, and I'm actually okay with that, especially since I already have a lot of Tesla stock on the side. So if we look at ARKF, this is actually their top 10 holdings, right? So they hold Square stock as their number one. So this is just a ton of growth stocks in an ETF. So if one of these companies, this is only the top 10, they have like a lot of other companies as well that they hold, but this is like the majority of it, right? In terms of weight. So like 12% of it is Square. 4% of it is Zillow, which is a big one, especially since everyone's now no longer going to obviously no one's going to open houses as much as they are looking online. The next one is Tencent, which is actually a really good stock in this list. Apple, Alibaba, Amazon. So they're not only like US companies, Alibaba, you have a Chinese one. So this is actually a really good one in my opinion, and that could really do good long term. Like look how well this has performed within last year. 50% in a year for an ETF? What? That's literally unheard of. So, in my opinion, long term, this will be an insane ETF that could actually make a lot of gains, especially since these are stuff that you can literally just buy and hold, and it's not that bad. They have a dividend of 0.36, which is, I mean, I'll take it for something like this. So the next one is Tencent. Now, this is the last one, I believe, but if you don't want to buy Tencent for a few reasons, you can buy Activision. Both of these are really good. I guess Activision is an honorable mention in this list. So, let's go to 1 year chart. It's up 50%. Like, it's up a lot. But if you go to Activision, it's up 70%. That's a lot as well. but Activision isn't quite at an all-time high. Tencent is definitely at an all-time high. Now, what Tencent is basically a company that they have a lot of stuff. They have gaming, they have their own businesses, they have entertainment. If you go to watch, I believe, Avengers, like the Avengers movies, you can see Tencent's logo like before the movie if you really look hard. So like Tencent owns a lot. Tencent owns like one of the biggest video games. Like they have a chunk of that, which is Fortnite, Epic Games. They have a big chunk of that. They own a lot of mobile games and stuff like that. So they actually own a lot of stuff in that space as well. So they have a big actual coverage in the markets of online entertainment, right? Or entertainment in general. But the thing with this is that it's at a 650 billion market cap. So there isn't a big room to grow with this. Like, yeah, you can make 30% in the next year or so, but it's already up 50% this year. So, man, like I don't see this stock really going high too much. As you guys can see, I barely have like $600 of this. I wanted to build a big size of this stock, but it is a 50% gain, so I would have to put this in like a my best stocks list in terms of percentage gain. I mean, I didn't gain anything because I couldn't build this position high enough. Like I didn't have this in my other accounts. Usually these stocks that I have in Robinhood, I have in my other account. Tencent, I didn't have in my this is all I bought of Tencent. I couldn't really grow this much further, but I mean, if you do want to purchase this, it may be a good opportunity for like a 20-30% gain within the next year or so, because especially since gaming and stuff is growing, they're very in the forefront of it. This is a Chinese company, by the way, so that they have a 0.2% dividend. Wow, 96% buy ratio on Robinhood. I don't personally like looking at the Robinhood analysts. Like look at the Tesla analysts, 26. It's telling you to sell, but I'm not selling. So, I mean, obviously, you just that do you. But yeah, that's Tencent. If you don't want to buy Tencent because it's at a 50p ratio and it's at 650 billion market cap with honestly not much upside. Yeah, it could become a $1 trillion company in maybe like 5 years, right? So if you want to wait that long to potentially happen, do your research maybe. But if you want to go with Activision instead, basically they're at a 40p ratio and only 62 billion, so they're not as big, right? And they have a 0.5% dividend, which is a lot more than the other one. But the thing is with this is that they're actually up 60% for the year, 70%. And obviously they're not into entertainment. They're in video games mainly. Like they're basically only in video games. And they do have apps as well. They own King Digital, they own Blizzard. So King Digital is a big app maker. Like they own mobile applications with games and stuff like that. And Google, Android, and iOS. Their big factor for this growth is their mobile game. Their mobile Call of Duty has brought a ton of sales, tens of millions of users. So that's the reason why they're doing so well. They're not at an all-time high yet, though. They're not. I don't have any position on this one specifically, but if this goes down to like $70, $60, I might purchase this if it does happen. I'm not sure, but this may be a good stock to purchase. Obviously, do your research on all of these, but this is a great growth stock in my opinion. That could probably hit 100 billion market cap pretty easily. It is a pretty high P ratio, but that's to be expected with growth stocks in general. So yeah, that has been my top 5 best stocks on Robinhood that are growth stocks or high growth. So hopefully you guys enjoyed this video. I'm going to be doing another video like this probably in a week from now, but it's going to be the top stocks to buy within August of 2020. And it's not going to be related to Robinhood. It's going to be like stocks I'm looking in general. So these are stocks you can buy like right now that are pretty good, and you might get good gains with it in terms of your growth. So hopefully you guys enjoyed. Thank you guys for watching. Make sure to subscribe to this channel if you haven't already, and I'll see you on the next one.